I think what we have to do is focus on the reality. What are they actually saying? What are they actually doing? And then make our investment conclusions based on that analysis. And it seems to me that they are committed to raising the interest rate significantly at this meeting next week. I do think they're going to come around and conclude that maybe just get it over with, maybe 100 basis points instead of 75 basis points, and then maybe one more hike after that. I mean, they know that monetary policy operates with a long lag on the economy, but they've got a credibility problem, and they're trying to get ahead of it. Actually, they're trying to catch up with the 2-year Treasury note, which is saying that within the next 12 months, or a lot less, we'll be at something like 3.8%.
Steve, I've got a couple of my colleagues here, and Santelli's a little older than Liesman. But Rick, can you remember where both sides were so certain of and neither one is a good outcome, an economy on the precipice of a recession and a Fed that needs to go 1 to 2 points at a time? Both of those, they're polar opposites. I don't know if I need to say polar. They're opposites. Do you remember the last time we had this sitch?
No, it is a rather unique situation. And what makes it even more unique is, and I like what Ed said, and he probably doesn't remember, but in the 80s, we saw a lot of this. He was at Drexel, I was at Drexel. Things have definitely come full circle. But if you look at Fed fund futures right now, the November 22 contract all the way to Feb 24, all of those are making new contract low prices as we speak. 16 contracts, okay? So they're getting Powell's message loud and clear, and his message is hard to argue with. I can't imagine he's going to go less than 3/4 of a point. But the problem is, and Mr. Sterling had it to some extent, it's not housing. The Fed certainly knows that they were going to definitely throw grenades in the housing market. I think about Eurozone inflation just released, year-over-year CPI up 9.1%. The pound at the lowest level since 85. The dollar very close to fresh 20-year highs. It's the global recession that somebody needs to pay attention to, Joe, because the United States is big enough that we're going to leverage the rest of the world down.
Is that you, Steve?
I think that's absolutely right.
Oh, Ed, go ahead.
I agree. We got to look at the global situation. And global situation, we have a developing global recession. I think the United States is not going to experience a bad recession. I call it a rolling recession, which means different sectors get hit at different times.
Steve, you're still in the, I think, at least recently, you kind of think the economy is, not great, but not ready to fall off a cliff. So you're behind Jay Powell and a couple more, at least a couple more 75 basis point hikes. Could you change your mind in a data-dependent way?
Oh yeah, totally. I mean, I think the 75 is okay here. I think I follow the Fed and try to communicate what I think they're thinking and what I think they're saying, and I think they're saying they need to get to 3 3/4 to 4%. The market may be overdoing it just a touch here with the 4.5%. But look, Joe, this opposition to the Fed is perfectly fine as long as you come to the table with a different theory of inflation, right? So Barry yesterday talked about the idea that he thinks it's okay for the Fed to stop at 3 to 4%. Of course, it'd be great to have that conversation, but we're not having that conversation yet. We had core go up in the last one. And that different theory of inflation seems to take two parts. One is that there's a lot to come down the pike here that has not been priced into the economy. The other is that there's a lot of data out there already showing that inflation is coming down. I have some sympathy with that. I also have a lot of sympathy with the idea that the Fed may be the last to know what's going on in the economy, given their, adherence to the transitory idea. They kind of missed the financial crisis while it was brewing and had to turn around and do an about face or a huge rate cut. So I think there's some sympathy with that idea, but you have to come to the table. If you think the Fed should not go up, you've got to come with a different theory of inflation, of what's happening right now and what's going to happen. And I don't necessarily hear that from those who are opposing the Fed.
Shepard Smith here. Thanks for watching CNBC on YouTube.